Yo, what's up traders? Welcome back to another video. Today we are going to look at two setups that formed yesterday and evaluate how high probability or low probability are. See, the moment you understand how to deal with low probability setups and high probability setups, that will increase the chances of being consistent in the market, making money. Otherwise, you'll just be gambling, trying to find out the hard way. Anyway, we have our previous day's high and low. So this is Monday's high and Monday's low, right? Now, and this is gold. As you can see, the market opened, pushed higher, then, came lower. So there was no particular trend by the time the New York session was beginning. We were just having range expansions. All right? Now, as the first hour evolves, we see this is a pump to the high because this was the original high of the day. So they break above the high of the day in the first hour with 1, 2, 3 pushes to the high. Signal number 1, we are at the high of the day and we are in a pump. So we go to the 1 minute time frame and check how the market behaved in the first hour. And as you can see, the market did push to the high and then started dropping. Now, I want to show you a cool observation that I have noticed that helps me know where the market is coming next. Now, remember yesterday when I told you look at candles that have no pins. This is a very good example. You see, these two candles, they have no pins above it. Meaning the market, excuse me, the market drove down quickly. When it started, it continued moving down. It never got a chance to come and test the prices above it. When the candle opened, it opened and continued going down. That was the pressure. It's the buying or selling pressure. So when the market tried to push higher, there was so much resistance that, well, it did not test this area. And when you look at all the previous candles, they have all been tested. They have all been tested. So at this point, I know that when the market comes back in the second or the third hour, well, I'm going to look for my trade setup in this region. Well, in this region above these two candles. So I am probably, it will be, around this region. So all you have to do is wait. So how the market continued, and at 9:30 the market started pumping higher. Now keep in mind, we are trading the most recent data. Okay? Now the market continued pumping higher and then broke structure. So we have come back to this area. We've already triggered this zone. Now, it did not give us a direct setup above that. So, in my mind, this is now a type 2 setup. It's not the best high probability setup, but it's a setup. You can take low risk trade. Well, it's a high risk trade where you use a bigger stop loss, but you reduce your lot size. Now, all I'm looking for is a retest and an engulfment. And the market gave us this engulfment at 9:57, 3 minutes before the candle closes. That is our entry. Now, where is our take profit? Our take profit should be below this area. We are trading the most recent data. Now, keeping in mind that the first hour really did have a pump to the high, it doesn't mean that the market will always come back to the low. All right? It just means that, especially when you're taking trades that are inside the high and the low, you need to minimize your risk and take, this is just like a scalp, a small scalp. So this is our setup. Our entry, our stop loss, say 15 pips, a 1 to 2 risk reward ratio, and boom, you're in and out. You're in and out. So that was the setup in gold. Now, the reason I took this trade, well, first of all, I was proving a point to myself that what I've been observing, I've not been going crazy. I have been, seeing patterns. And yeah, I wanted to test the patterns with a real account to, see how I will react emotionally. And, well, it went pretty well. Now, when you look at NASDAQ, same procedure. Yeah. So this is our previous day's high. Our previous day's high and our previous day's low was here. But the market continued lower. So I want you to see how this market behaves before the New York window opens. Now, if you've been reading the book Mind Over Markets, I still use the reference line or the initial balance. I draw that line to check and see how the market is behaving with reference to the initial opening. Now, the market oscillates around the initial balance. Just, there is no real direction. It's just consolidating. And then the market breaks down. Now, it breaks down to the previous day's low and fails to continue lower. As you can see, the market just continues to oscillate about or around the previous day's high. Now, let's look at the first hour. As you can see, the first hour broke up, tried to retest but failed, and then came back. So the first hours will set obviously the high and the low of the session. but they failed to break below the low of the day. Now I want to show you the same trick that I used in gold. Now, as you can see, when we look in the gap time, we are looking for the candles that were never triggered. So we have this candle here, but it was triggered in the first hour. We are looking for these candles that have a flat surface. If it's at the low, we are looking candles that have a flat surface below. If it's at the high, we are looking at candles that have a flat surface above. Now, the last candle, well, this was a nice morning star setup pattern, but this was the last candle that had not been triggered. So this is my area. As you can see, this is the line. I had drawn that line up to here, but I pushed it, and we have our zone where we are expecting price to come back. So all we have to do is wait. We are at the low, so we wait for the price to come back to the low, and at 9:30 the market comes down in a strong push. Now we are below the low of the day. So as you can see, the market came down, then gave us our W pattern with a break of structure. Now, if you are confused about the break of structure, this is the break of structure. These two candles, they broke this structure because the overlying trend was down, higher, lower low, lower high, lower low, lower high, lower low, lower high. Tried to go lower but failed, but there was a higher high. So when you see this, you know that the trend is changing. So we are looking for an engulfment. Now, I want to show you something else. Now, as you can see, this candle here at 9:43, it was also our flat candle. So in my mind, when I see a break in structure and we have this what's that, a candle with the flat structure, so this is the zone where I'm looking for my entries, but I want to see confirmation. So the price comes down, triggers it at 10, and then the first candle is a pin, and it's well, when you look at the structure of this candle, I'll talk about it more in another video. I see I don't have much time here, but when you see this structure, it's a candle with very long pins, but it's bullish. That is an entry. But do your research more, trade it on a demo account, and see the progress first. But this was a nice setup. Although I never traded this setup, I traded the gold setup, it is still worth looking into. Anyway, hopefully you got value from today's video. Make sure you like, make sure you subscribe. Stay disciplined, stay focused. See you in the next video.